This video is about cash book, which is one of the books of regional entry. Therefore, when talking about the accounting cycle, then we must be able to understand cash book as one of the components of the accounting cycle. After studying this chapter, therefore, you should be able to distinguish the various types of cash book, that is the 2-column cash book, 3-column cash book, and the petty cash book. Also prepare the various types of cash book and balance them off duly as required. Cash book is used to record cash transactions only, that is cash receipts and cash payments. For this purpose, it is therefore having two sides, one side being the debit side and credit side. Cash receipts are recorded on the debit side, also known as the receipt side, and cash payments are recorded on the left side, which is the credit side, also known as the payment side. So looking at this format, there is receipt side on the left side, and on the right side, we have payment side. Let us understand other concepts related to the cash book, beginning with the opening balances. In the cash book, opening balances are usually recorded under cash for cash in hand and bank for cash in the bank, and usually recorded on the debit side. That is in a case whereby there is a positive balance of cash in hand and also a positive balance in the bank. In a case where there is a bank overdraft, that is to mean that the bank has been overdrawn, then the bank overdraft is credited on the right side or on the credit side. There is also a concept known as contra entries. When there is a transaction that relates to both cash and bank transactions, such a transaction may affect both sides of the cash book. Such a transaction may affect both sides of the cash book. It's the same transaction, but is affecting the receipt side and also the payment side. You may find that there is an item affecting cash on the receipt side and affecting bank on the payment side, and vice versa. Such a transaction is known as contra entry in the cash book. There is also a concept of check endorsements. A check may be received from a customer, for example, and that check is not deposited in the business bank account. Instead, the check is endorsed to be deposited or to be cashed by a third party. Such a check must first be recorded as has been received and then recorded as having been issued from the business cash book. The check will therefore be recorded on the receipt side of the cash book and also recorded on the payment side of the cash book to mean that it has been received from the customer and then issued to a creditor, for example. Bank charges and bank interest is the next concept. If the bank charges any interest or check collection charges or fees, they are entered on the credit side of the bank column of the cash book. Similarly, if the bank gives any interest, the such interest or commission collected by the bank, they will be recorded on the debit side on the bank column of the cash book. There are various types of cash book. These three types are commonly prepared by various organizations, which include a 2-column cash book, a 3-column cash book, and petty cash book. A 2-column cash book records cash and bank column on both sides. A 3-column cash book has additional column for discount on both sides after bank and cash column. Petty cash book records small repetitive transactions which are incurred by the business, especially cash transactions. Petty cash book records small repetitive cash transactions of the business. Let us look at these types of cash book one by one. Let's now look at the types of cash book. The first type of cash book is known as the two-column cash book, as you can see here. A two-column cash book is a cash book which has two columns on both sides, i.e., it has the cash column, and the cash column is used for recording cash in hand in the business, and also bank column, which is used to record cash in the bank in the business bank. All receipts are entered in the cash column of all cash receipts are entered in the cash column on the receipt side, and checks received are entered in the bank column of the receipt side of the cash book. And in case of payments, all the cash payments are recorded on the payment side on the cash column, and all the payments through the bank or withdrawals which have been made from the bank are entered on the bank column on the receipt, the payment side of the cash book. And all withdrawals or payments to the bank are recorded on the credit side or the payment side of the cash book, but in the bank column. This is the format of a two-column cash book. First, we need to have the date, but then we have the details. Then these are the two columns, the cash column here, and then the bank column. That is on the payment side, and on the receipt side also, cash column, and then the bank column. So those are the two columns that are referred to in the two-column cash book. The next type of cash book is known as a three-column cash book. And in this type of cash book, there are three columns on both sides. That is on the receipt side, there are three columns, and on the payment side, there are three columns. The first two columns are for cash and bank, and the additional column is for discounts. That is where we have discount allowed and discount received. So you may have the cash column, the bank column, and discount allowed is on the receipt side. The cash column, bank column, and discount received on the payment side. So this side is the receipts, and this side is payments. This example illustrates preparation of a three-column cash book, and it is as follows. The following transactions relate to a startup business, Simba Limited, for the month of January 2022. On first, Simba Limited commences business with $30,000. On second, deposited $20,000 of the cash into the business bank current account. On third, company received check from Kiwi Limited for $1,000. On seventh, deposited check from Kiwi Limited into the business bank account, $1,000. On 10th, paid Rhino Enterprises by check, $1,980, and received a discount of $20. On 11th, received a check from Wealth of Partners Limited of $970 after a discount of $30. The company made sales for cash $2,000. On 17th, deposited cash in hand into the business bank account $3,000. Purchased a motor vehicle by check $6,500. Purchased goods by check $1,500. Paid Giraffe Traders in cash $2,000 after a discount of $100. Withdrew from bank for office use $500. Purchased furniture by check $1,200. On 30th, received a check from Impala Traders and endorsed it to Rhino Enterprises of $5,000. Required, prepare a 3-column cash book of Simba Limited for January 2022. To answer this question, we are going to prepare a 3-column cash book as follows. Right, this is Simba Limited, 3-column cash book for January 2022. We start with the first transaction. Simba commenced business with 30,000. The 30,000 with which Simba commenced business is known as capital. So that is recorded on the receipt side because the business receives that money. The business receives that capital. So on the first date, then we say January 1st. January 1st, and we write capital. And this capital is cash. So we record that under cash as 30,000. On second, deposited 20,000 to bank. In this case, this is a transaction which is known as a contra transaction, which is affecting both cash account and bank account. So what's happening is that cash will be paying to the bank. So on the side of cash, we enter on payments under the side of payments. Under the side of payments, we enter cash on January 2nd. And the particulars is bank, and being a contra transaction, we mark it C. Record the amount under cash as 20,000. And the same transaction is recorded under bank because bank is receiving that same amount. So under bank, we are going to have on January 2nd, the particulars is cash and is a contra transaction, but record the amount under bank column. On 3rd January, the company received a check from Kiwi Limited for 1,000. That is check received, which goes to the bank column and the receipt on the receipt column. On the receipt side, bank column under the receipt side. So on January 3rd, Kiwi Limited, that goes to bank column because it is check receipt. And on January 7th, deposit the check from Kiwi Limited into the business bank account. Now, this transaction is the same transaction as on 3rd, so we don't need to do anything to that particular transaction. On January 10, paid Rhino Enterprises by check 1980 after and received a discount of 20,000. This is a payment, so record on the payment side, and then a discount is recognized. On the payment side, we have 10, and we have Rhino Enterprises. Rhino Enterprises. The payment is by check, so under bank, 1980. But there was a discount received of 20. So when payment is being made, discount is received, and the discount received was 20. On 11, received a check from Warthog Partners Limited, 970 after a discount. So on receipt side, on the side of receipts, on 11, we say Warthog Partners. Warthog Partners, the amount is received by check. So under the bank column, 970. And there is a discount which was allowed. There was a discount allowed of 30. And the discount is recorded there. On 15th, the company made sales for cash. That is cash received. So, and because it's cash received, we record it under receipt column or on the receipt side under cash column. That is on 15th. So on 15, we record on 15, we record there. So on 15th, we record sales and the sales amount, is 2,000. That is under cash column. On 17th, deposited cash in hand into the bank business of 3,000. This is another contra transaction where cash in hand is deposited into the bank. So cash is reducing and bank is increasing. Cash is making payment to the bank. So we record and on the payment side under cash, that amount on 17. Bank, this is another contra transaction. So we record it contra and under cash, 3,000. And the 3,000 is going to the bank. So the same transaction is recorded on the receipt side where the bank is receiving. So under the bank, we're going to record cash. And this is a contra transaction again, and the amount is $3,000. On 19th of January, purchased a motor vehicle by check 1,000. Purchased a motor vehicle by check 6,500. That is on 19. So this is payments. When we purchase a motor vehicle, we make payments. So 19 is a payment for motor vehicle. The amount for that particular payment is 6,500 and is made by check. So that is under bank column. On 20th, purchased goods by check 1,500. That is purchases, so it is under payment or on the payment side under the bank column. On 20th, we record purchases and the amount for the purchases is 1,500 under the bank column. On January 22nd, paid Giraffe traders in cash 2,000 after a discount of 100. That is on payment side also. On 22nd, payment to Giraffe traders. The amount is 2,000 and a discount was received of 100. Discount received was 100. On January 29, we drew from bank for office use 500 shillings, $500. On 29th January, we drew from bank for office use $500. This is another contra transaction where the bank is making payments to cash. The bank money is withdrawn from the bank to cash, where money is withdrawn from the bank to cash. Therefore, on the payment side, we enter under bank column. On 29, this is a contra transaction, so we say cash in bracket contra transaction, bracket contra transaction, and we record under bank 500. On the receipt side, the same day, 29, we record bank contra transaction, and we record under cash 500. On January 30th, purchase furniture by check 1,500. That is on the payment side. So on 30th, record furniture. And the amount for the furniture is paid through the bank. So 1,200 under the bank column. Again on 30th, received a check from Impala Traders and endorsed it to Rhino Enterprises of 5,000. This is a two-way transaction where there is a receipt of the check and then there is endorsing of the check. The first record is for the receipt of the check. So on 30th January, the receipt of the check is recorded under bank column. And we record Impala traders. The amount is 5,000. And then the check was endorsed. So endorsing of the check is on the payment side. That is again on 30th, where we say Impala traders, also under the bank column, 5,000. Now we have recorded all the transactions as required, but a cash book does not end there. We need to balance off the transactions. We need to balance off the cash book. And to balance off the cash book, we need to get the total for both sides. Get the total for the credit side, get the total for the debit side, and then balance off. To balance off a cash book, the bank column is balanced separately and the cash column is balanced separately. For discount columns, the totals are transferred to the relevant discount accounts, either discount allowed or discount received. Let us begin with the bank column. Let us begin with the bank column. On the bank column, the highest total is on the debit side or on the receipt side, which is 29,000, which is equal to 29,970. That is the amount we enter on both sides, 29,970. And then we enter the difference on the side with the lower total. That is on 31st January, we enter the difference as a balance carried down. On 31st January, we enter the difference and it is known as the balance carried down. On 31st, that is on 31st January, we enter the difference and it is known as balance carried down. The amount of balance carried down equals to 29,970 minus 18,680. And that is equal to 11,290. That is the balance carried down, which is entered on the credit side or on the payment side, which has the lower total. When we talk about the cash column, then the side with the higher total is again the debit side or the receipt side, which has a total of 32,500. So we enter that on both sides, 32,500 as the total. The total is 32,500. And the difference between the two sides, the side, the payment side and the receipt side, the difference between the two sides, the payment side and the receipt side, equals to 32,500 equals to 32,500 minus 23,000. And that is equal to 9,500. 9,500. So 9,500 is the balance carried down for the cash column. Right, so once we do that, then we need to double underline the totals. And after the total on the opposite side, we enter the balance brought down, which is the same as
the balance carried down. The balance brought down is the same as the balance carried down, but it's entered on the opposite side of the balance carried down. So on February 1st, we have balance brought down, which is the same as the balance carried down. Therefore, we have 11,290 here and 9,500 here. For the discount columns, there is no need to balance them off. We just write the total, and that total is transferred to the discount account. The total is transferred to the discount account. So that is how to prepare a 3-column cash book. That is how to prepare a 3-column cash book. A 3-column cash book is similar to a 2-column cash book. The difference is only that a 3-column cash book has additional column for discount. The next type of cash book is known as petty cash book. This is a cash book which is used to record small repetitive payments which are made by petty cashier, such as conveyance, postage, telegram, transport, and other expenses. A petty cashier maintains a separate cash book from the main cashier. Therefore, the structure of the petty cash book is different from the structure of the 2-column cash book or 3-column cash book. The petty cash works under imprest system, where a definite sum or at the beginning of the period known as imprest is given to the petty cashier. The petty cashier is expected to make payments out of this imprest amount. He presents the account to the head cashier and gets a reimbursement of the amount that has been spent already to restore the amount to the full imprest amount at the beginning of the next period. The expenses page should be classified under relevant subheadings. For example, we can have expenses classified as expenses for postage, telephone, transport, stationery, and miscellaneous. Because these particular expenses or payments are repetitive. So you'll find that under each and every subheading, then there are a number of transactions or series of transactions which have taken place. This question illustrates preparation of petty cash book adopted from ATD1 question of 2016. It is as follows. John Wambua maintains his petty cash on imprest system. The petty cash was set at 80,000 per month for the year 2016. On 1st February 2016, the opening balance brought forward was 18,500. The following transactions took place during the month of February 2016. Withdrew cash from the bank to restore the imprest system, postage stamps 4,500, bus fare reimbursed 2,800, petrol 2,500, stationery 8,600, postage stamps 3,500, bus fare reimbursed 4,600, newspaper for 2 weeks 2,800, petrol for motorcycle used by messenger 3,000, periodicals for the office 2,500, airtime for cell phone 4,200, internet charges 3,800, bus fare reimbursed to staff 2,500, petrol for motorcycle is 2,500, office parcel sending charges 2,200, and airtime and internet charges 10,200. Now we need to classify these transactions into the various classes. Starting with the postage stamps is under postage. So we have one of the subheadings of the expenditure is postage.
So we have postage as one of the subheadings of expenditure. Then we have bus fare reimbursed is for transport or traveling. For transport or for traveling. Petrol is also for traveling. Stationery, that will be stationery. Bus fare is traveling. Newspaper and periodicals is stationery. Petrol for motorcycle is traveling. Periodicals for office. So the expenses will be classified under the following subheadings. We have postage stamps is for postage. Then we have bus fare for traveling. Bus fare will be traveling. Petrol will be traveling. Stationery will just be under stationery. Postage stamps is postage. Bus fare is traveling. Newspaper and periodicals is stationery. Petrol for motorcycle is traveling. Periodicals for offices is stationery. Airtime for cell phone is under telephone and internet. Telephone and internet. Internet charges is under telephone and internet. Bus fare reimbursed is traveling. Petrol for motorcycle is traveling. Office parcel sending is under postage, and airtime and internet is under telephone and internet. So we have four sub categories of expenditure that we're going to have in this case. So following the format that we provided for a petty cash book, then we are going to prepare petty cash book. And this our petty cash book is going to have 4 items of expenditure. Therefore, totally we are going to have like 8 columns. Now we prepare the petty cash book as follows. Right, so this is John Wambua, petty cash book for February 2016. We start with the balance put down at the beginning of the period, and this balance put down is on February 1st, and this balance put down is on February 1st. The amount is 18,500. And the detail for this particular transaction is balance brought down. Balance brought down. After that, we have a total of after that, there is a reimbursement of a new amount that happens on 1st, again, February, and we have reimbursement from the bank. Reimbursement from the bank, the amount is, reimbursement is 61,500. The reimbursement is 80,000, which should be the interest amount, minus the amount available, which is 18,500, so that we get a total of 61,500 as the amount that should be reimbursed. After the reimbursement, then we go to a transaction on 3rd. And on 3rd, there is payment of postage stamps. Postage stamps is 4,500. And that should be classified under postage. So we have 4,500 under postage. Secondly, bus fare. that is on 4th, bus fare, and bus fare is 2,800. That should be classified under traveling, 2,800 under traveling. Next is petrol on 6th. Petrol is 2,500, which should also be classified under traveling. On 8th, stationary, and that should be classified under stationary. Stationary is 8,600, which should be classified under stationary as 8,600. On 10th, postage stamps again, and postage stamps are classified under postage. The amount is 3,500, which is classified under postage as 3,500. On 12th, we have bus fare, and bus fare is 4,600. That should be classified under traveling of 4,600. On 14, newspapers, there is payment for newspaper, and the payment for newspaper is 2,800, which should be classified under stationary. Newspaper is part of stationary, so should be classified under stationary. The next one is on 18, where we have periodicals. Periodicals also should be classified under stationary, and the amount is on 16. On 16, we have petrol. Petrol is 3,000, and this should be classified under traveling. The next one is on 18. On 18 is periodicals, and periodicals are part of stationaries. So we have 2,500, which should be classified under stationary. 2,500. On 20th, there is airtime. And airtime is classified under telephone and internet. The amount is 4,200, which should be classified under telephone and internet. On 21st, there is expenditure for internet, which should also be classified under telephone and internet. The amount is 3,800. On 22nd, there is an amount for bus fare, and the amount for bus fare should be classified under traveling, 2,500, which should go to traveling. On 23rd, there is expenditure for petrol, which should also be classified under traveling. The amount is 2,500. On 24th, expenditure is for parcel, office parcel sending, which is more of postage. So the amount is 2,200 is for sending parcel, therefore it is for postage. Lastly, is amount for airtime and internet on 26. So airtime and internet should also be classified under telephone and internet. The amount is 10,200 under telephone and internet. Now, having recorded all these transactions, we need to determine the total. We determine the total expenditure and determine the balance at the end of the period. Therefore, We need to determine the total under every column and the total for the total expenditure. $10,200 for the first column. The second column is, in the third column, the total is 13,900. In the fourth column, the total is 18,200. The total for the amount paid is 60,200. After determining the total that has been paid, then we need to determine the balance. And the balance carried forward at the end of the month of February, which is on 28 February, balance carried forward should be equal to 19,800. 19,800. So that the total should be 80,000. The total should be 80,000. That is the interest amount. The total should be equal to 80,000, which is the interest amount. So on the side of the amount received, on the column of the amount received, we also need to enter the total, which is we also need to enter the total, which is 18,000 plus 16,000, 61,500. That should give us 80,000. After that, we need to enter the balance brought down. And the balance brought down is on March 1st. On 1st of March, we have the balance brought down. The balance brought down is the same as the balance carried down, and therefore that should be 19,800. Right. So if the new period is beginning March, then after the 1st March, then a new reimbursement need to be done. The reimbursement that should be done should always be the same as the amount that has been spent, which is 60,200. That means after entering the balance brought down, then to continue to the next period, it means there will be a reimbursement of 60,200 on 1st March as the new period now begins. That is how to prepare a petty cash book. The last journal is known as general journal or the journal proper. This journal is used to record information which has not been recorded in the other types of journals. That is the non-cash transactions, but they are non-cash transactions which do not entail purchases and sales. This journal is used to record non-cash transactions which are not recorded in the other journals that we have talked about. To find that these non-cash transactions are non-cash transactions that are not related to the operations of the business, which are about sales and purchases. There are other transactions that do not deal with sales and purchases. Such non-cash transactions include writing off assets from the account, drawing for goods and other assets from the business by the owner of the business, purchases or sale of non-current assets on credit. For example, a disposal of non-current assets like motor vehicle. These transactions are recorded in the general journal. Others may be issuing of shares and so on. They are not recorded in the cash book because they are non-cash transactions, and not recorded in the purchases and sales journals because they are not related to sales and purchases, which are the operations of the business. Therefore, this type of journal has both debit and credit side. Debit side and credit side.
It also has an area where explanation and title of the account affected by such a transaction is recorded after recording the date of that particular transaction. That is the general journal, and that is the format of the general journal. It can be used to correct errors and other kinds of transactions. So students usually use this a lot when correcting errors in accounts.